So it does play in your mind. No trader is a good trader. All traders to me are bad traders because at least they can admit when they've made bad trades, and we've all done a few of them.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome to the Two Traders Podcast, and today it's the Three Traders Podcast. We've got Darren on the line. Hey Darren, how are you today?
I'm really good, Walter. Nice to see you again.
And we've got James, and James here has got quite a story to tell. So we've decided that we are going to hear it. And James has been so kind to donate his time. He's quite a busy guy, as you'll find out in a moment. So James Kensington, how are you today, my friend?
Well, I'm currently in New York, enjoying the New York lifestyle. But obviously, with the Brexit and everything, we travelled from Australia to the UK and then to New York. But doing very well this morning, and looking forward to contributing a little bit of my knowledge along the way.
Yeah, well, let's get into that. So let's talk about your trading journey, because I think it's a fascinating one for people listening. Tell us a little bit about how you got into forex trading and sort of what it was like for you in the beginning. Like, what were the early days like?
Well, to be honest, I started getting into trading. I was an IT guy that started off an IT career and then went into paramedicine and then realized that there wasn't enough money to be made to supply for a family and stuff like that. And I'd come out of uni and done all the lovely degrees and all those bits and pieces. So that was the real drive, was the lack of income or house ownership for me. Because I came from a very wealthy family and who were very high up in the world, and I realized I was never going to be able to enter that league of what I call a league of oil gentlemen. So I decided on a quest of self-wealth creation. My first step up in the industry was actually going and doing a course with FXCM with Dennis, but he's no longer with us. Lovely gentleman who knew about price action and trading and risk management. And then soon enough I found your book, Walters, and started doing quite well on there. But when I first started, it was not easy. I would say I was a break-even trader. I used to give more back to the market every month. I would make money and then give it back to the market, and it was quite frustrating to begin with. I reckon it took me a good year before I even started making profits, and a lot of time commitment and studies as well prior to that. That was me in a nutshell.
So what do you attribute, like you say it took a year, so you did better than I did. It took me 4 years. So tell me, what was it that kind of was the catalyst for you that you can point to that now and say, okay, well, that kind of really helped. Like that was what set me off on the right path. Was it just finding the right education? Was it some way that you approached your trading differently?
It was having a mentor. I mean, like I said, I had a very good friend who was already in the financial services industry, and he basically said to me, if you want to get into wealth creation, shares are not the way to go. They've been losing money for years. They're the hidden dirty secret of the industry. And he was saying to me, you need more volatile stocks or volatile currencies and so forth. And it was having the mentor that made the difference. Having someone who knew the industry, who had proven results. I mean, he could show me his paperwork and his trading, and had a particular method that he traded. I was just lucky to have a good friend in the industry. I think if I hadn't, I think I would be 10 years down the track ripping my hair out and only just found your book, to be honest with you, Walters. I was very much spoiled for that choice. So having a mentor early on that's not someone who's more open about their trading history, and will actually show you just how trading is, and not feed you that laughable story of fast cars and fast women, etc. Then you're more likely to do a lot better. And I had my hand held all the way. I didn't control the risks on my accounts when I started. When I started having an account, he used to control my risk using a piece of software, funny enough, so I couldn't damage my accounts when I first started out in FX. But when I tried to, he used to put up a red mark, and we would have a discussion every week about why I attempted to break my risk management. So, yeah, big difference. It was the mentoring, I think, that makes a big difference.
That's interesting. So the other thing that I find fascinating about your story is that you mentioned that you've come from a family of wealth, but you weren't necessarily invited to sit at the table. And I'm wondering, in terms of mindset, how that affected you, because I think, a lot of people listening to this, they probably haven't come from a family, where certain things are available. But what was interesting about your story is that although you knew it was possible to create that wealth, you weren't really, you know what I mean? You weren't really given the silver spoon, so to speak. So talk about, I'd be interested in hearing your thoughts about how knowing that it's possible affected your sort of drive and your desire, and maybe even changed your own personal limitations that you place on yourself. Because I find that bit really fascinating, because it's kind of a unique aspect to your background, isn't it?
It is, and there's a lot of things that you get taught as well, being in a wealthy family, and one of them is that wealthy people are the most stingiest people around. And I'll tell you now, my father, when I was growing up and going to uni, I drove a cab to put myself, a cab to actually put myself through university. There was no handouts or anything like that, and if anything, they were harder on us guys. And then, like I said, one day, a couple of years down the track, when I'm quite successful at trading, is now when they've started investing in what I do as a business. But yeah, I think to me it was more of the fact that if you've had a parent or parents that have had to really strive and work hard for their wealth, they're more or less likely to give it away, and actually will be tighter with their budgets on their kids. I'm very happy I got all the education, etc., etc. But when you really look at it from a point of view in the industry, it was a drive to do better than your parents did, because you're kind of trying to meet that marker that they did, which is so high. Because everything else, let's say for example you became a doctor in my family, they'll be considered the average norm or a lawyer. So you're always trying to meet a higher target. So in a way it was a way of trying to be the next thing in the family, and in a way that does drive your psychology quite aggressively.
Yeah, I mean, what do you think about that, Darren? Because this is one of the things I think that is kind of unique to your story. I think for a lot of people out there, they probably think things like, well, that's the kind of thing that happens to someone else, or I don't have that privilege or that opportunity to trade someone else's money, or whatever it is. They have these sort of these mental blocks. I'd be interested in your thoughts, Darren, about that, because I think that's fascinating, James. The way that your background.
Yeah, it's kind of the polar opposite of my background, really. And yeah, I imagine if I was in that scenario, I would feel a lot of pressure to be successful, and on a much greater level. I don't know whether that's true for James, but that's how I would perceive that. Coming from that background, we were going to talk about this last week, weren't we? Where essentially the authority figures you have when you're growing up and your relationship with them, in a way, the market kind of becomes that. So if you had very successful parents, then you'd kind of feel that drive to try and sort of beat the market and prove yourself to the market. Yeah, it's that's how I'd feel about it.
Okay, so James, fast forward now. You've got to the point where you're actually making money trading. So what's the next step for you? How do you progress from there?
Well, this is the thing, is I was doing it part-time as well, and this is where people don't quite understand. I had then switched out of my career into IT engineering, and then started out as a IT manager, and then engineer, and then back to management, and then eventually CEO of an IT company. And there's a small IT company which when I was earning my wealth in FX, I decided to buy that IT company as a tax offset. So I really just treated FX as a part-time investment, as a little bit of additional money on the side. And at that time in Australia, outsourcing was so aggressive with IT, lots of IT people were losing their jobs, particularly to cheap labour overseas and stuff like that. And we wanted to create something different and unique than what we did in the marketplace. So even today, I still own that IT company, and I make sure that staff are well looked after, and I invest money into them. But for a good, I would say, for a good couple years, I traded part time, and I treated the investment just as that, just as an investment. I didn't treat it as a source of income. And I think this is the reason why I grew it so quickly. Is I had my set of rules, I had my training, and then of course I read a couple of your books, and then sort of did modify the system a little bit, but I did a lot of back testing before I did anything live. And I had multiple accounts, so I wouldn't, with my little bits of equity that I had, I would split them up into 4 accounts, and I would have them running over a period, and then cumulatively I would get the total of those accounts. But the main thing was working full-time and trading part-time, because it pushed me into the European session all the time as well, which is the highest probability session of making a winning trade to me. So it kept me disciplined. So I'm not sure if anyone's had a similar background, but it was just a bit of a part-time hobby for me, and I enjoyed doing it.
Well, I think most traders listening to this probably have a job, and then trading is kind of on the side like that. So what were the rules? I'm more interested in sort of the structure that you built, because obviously you have this IT, maybe you hadn't necessarily bought it at that stage, but you're working in IT, and then you're trading, which is for you in Western Australia, the sort of late afternoon, right, is when the London market sort of fires up. So how did you structure your life?
Yeah, about between 2 and 4 o'clock you start getting movement in that market, pre-market as well. So what had happened is that I used to take my lunch break at 4 o'clock. I know it sounds a bit funny, but I used to work all through the day without a break. And then I used to have my lunch break at 4 o'clock, because in IT you're 24/7 availability to the client, so we worked it in. But everyone knew James got his lunch break at 4 o'clock or would be grumpy for the rest of the day. But I did have my tablet and my iPad with me a lot. I wouldn't recommend trading off a tablet, though. I've made too many mistakes in my lifetime. So in the end, what I did was just get permission from my IT manager to trade during the day on my computer whilst I was doing my work, as long as my work was delivered. At the end of the day, that was fine. Of course, as I went on to be the boss, I changed those rules a little bit around, because two of the guys that worked for me at the IT company are now working for me as traders, and they prefer to keep their full-time jobs in IT and trade part-time as well. But yeah, that's a little bit how I structured it. A lot of people will say that's a bit strange, but I had the opportunity to do it. But a lot of people, and I was doing the 4-hour charts as well, a lot of people don't have the opportunity to trade every 4 hours. So that's why I do recommend the dailies as well, because like I said, I had multiple accounts with a similar strategy, just different time frames. The one I ended up giving up was the 1-hour time frame. I couldn't do that after a while. Too much stress, too many issues, always missing trades. I ended up sticking to the 4-hour and the daily, but it just suited the lifestyle that I had. And that's a big thing as well. Lifestyle is really important when trading.
Yeah, that's why most people get into it. So Darren, you've traded both the 4-hour and the 1-hour chart. So I'm interested in getting your take, because I mean, James is kind of on my side, which is, move to the higher time frame, kind of relax a bit and let the chart slowly unfold. But you, I know, do sometimes trade the 1 hours, right? I mean, that's one of the more active time frames for you.
Yeah, but, it is a full-time job, really, on the 60-minute charts, and you need to be there at those key times, and you kind of need to be at the charts as well. So it's very intensive, and I think, we all agree that basically the higher time frames make trading easier. decision-wise and psychologically easier to deal with. And I thought it was an interesting point that James made about when he first started doing well with his trading, that it wasn't sort of considered his main income. It was an investment and something on the side. So that kind of alleviates that kind of pressure where you have to win this week because you need to pay the bills. And I see that a lot with traders that I talk to. They'll say, right, well, that's it. I've stopped working for a few weeks, and then within a week or two, they're messaging me saying, well, what's going wrong? I've had a losing week. I need to start earning. And I think alleviating that pressure from actually making the money to survive from trading is a really smart move.
Oh, absolutely. I was talking to a trader the other day, and he, he's a great trader. He definitely knows how to extract profits. He's been doing it longer than I have, but he ran into the same thing. It was, as soon as he quit his job and tried to go full time, that pressure is what really kind of messed up his approach. And I'm wondering how, James, how do you deal with that? I know one of the things that I find fascinating about your trading is you take what many people would consider, maybe not in the managed, money sort of finance world, but in our retail world of forex, a lot of traders would consider the amount that you risk per trade to be almost like is it worth it?
Well, this is the thing where people get it wrong, is that how I used to perceive it is that when I first started, I needed to have a chance of growing my accuracy and doing what I needed to do. And what I realized is that if I had a lower risk percentage, I was allowed more mistakes to grow as a trader. Because if you have 5 trades at a high risk percentage, you're not going to get a lot of information out of that. But if you're allowed 20 or 30 or 100 trades to see how you're doing on your system, to let it grow out and blossom, then you're going to be able to see whether your system actually works or not. Because majority of people I know who are good traders, the first thing they do is they put high risk on it immediately. They think the system doesn't work, when really they're just not giving it a chance. Because of the risk could ruin an optimal F. And I've had big fights with funds over optimal F. I have a rule, no more than 2% risk. And if they don't like it, they can get stuffed. Because at the end of the day, it's responsible investing, especially when you're dealing with other people's money. Another good point that Darren and yourself were making, and it is very important, is when you go, I've been in the transition from part-time to full-time trader, and now I do actually trade the 1 hour charts, funny enough, a little bit more than I would care to admit, but I'm working on those at the moment. I'm doing very well with them, and it does change your outlook, because you are going from an income from an investment to an income source as well. And I had a few hiccup weeks where I had losing trades in a row, and I used to question whether I was doing the right thing or not. So it does play in your mind. No trader is a good trader. All traders to me are bad traders, because at least they could admit when they've made bad trades, and we've all done a few of them. Even till today, I've miscalculated a risk on a trade, but fortunately closed it before it went wrong. And we've all had losing streaks as well. Even though we end up on top with a good statistics, we're all human at the end of the day. But yeah, you are right. Going from a full-time job with security and part-time investing, and then going to full-time trading, that's a make or break situation. And I don't recommend it for the people that can't deal with the fact that they might not have any income for that week. And that's why I recommend having large equity before you've grown your large equity in your investment part-time, before you jump into the industry of, let's say, 20 grand. People think will pull them through the year and they'll be on their way making money as a full-time trader. 20 grand will just get the bills paid, and that's really about it. Because the true cost of your lifestyle, it's all about reversing it, isn't it? When you go to a full-time trader. True assessment, true evaluation.
Okay, that's it for part 1. We'll see you in part 2, when you will learn about the problem that we have with all clients. The funny story about the Ferrari, the priest who trades for James, the fire that almost burned down the private zoo, how forex funds and why forex funds got a bad name in the industry, and the one big trap, this is a big one, big mistake that most successful traders fall into. All of this in part 2. See you next time.